It's time now for our 360 rounds. Let's bring in our panel to discuss the state of the housing market. Joining us are Katie Hubbard, the EVP of Capital Markets at Walton Global, and Lawrence Yun, Chief Economist of the National Association of Realtors. Thank you both for being with us today. Now, Lawrence, I'd love to just start with some of your takeaways from the data that we've gotten in the last 24 hours. We saw new home sales at a 3-year high, existing home sales in line, and what some of this information is indicating to you for the broader market.
We have seen the mortgage rate decline throughout August in anticipation of the Federal Reserve rate cut. Ever since the rate cut, mortgage rate has risen a bit, but overall, the mortgage rate much favorable now compared to early part of the year. And new home sales jump greatly because new home sales are measuring contract signing, not closings, but contracts. So it's responding quickly. While existing home sales in August still remain sluggish because it's reflecting the mortgage rate condition of the earlier months because they take time to get to the closing table after signing the contract. But overall, I feel optimistic, lower rates to bring more buyers to the market.
All right, and Katie, coming to you now, we finally got our first rate cut from the Fed. Would you consider this to be a potential turning point for the housing market?
Well, Marley, it's great to be here. Thanks for having me. I would say the mortgage rates continue to be just really sticky at 6.34% for the 30-year fix today. That's 222 basis points above the 10-year Treasury, which historically the spread between the 10-year and the 30-year fixed is 170 to 190 basis points. So just the market is pricing in as we just heard, that the rates are staying relatively high. So we don't really anticipate the 30-year fix to dip below 6 or to even get to 6 until 2026, even with a few potential rate cuts coming later this year.
So even with those rate cuts coming, you don't foresee the mortgage rates continuing to lower in any sort of meaningful way to bring a lot of these buyers on the sidelines into the market themselves, Katie?
Well, it's interesting because we did have a short-term drop, but rates did, pump right back up to that, getting close to that mid-6s. And historically, it's just people hear the Fed is cutting rates and they think that the 30-year is going to drop, but it's really not tied directionally to that. It's more tied to the 10-year Treasury. So I think that just psychologically, it does help people when they hear rates are getting cut. It helps people think, okay, now might be a good time to buy, and it gets people off the sidelines to go shopping.
Yeah, and as I'm looking at the 10-year right now, we're just at 419, so even higher on the day. But Lawrence, coming over to you, as far as regional trends that we're observing, are there parts of the country that are faring better right now than others?
Region, because of the affordability, home prices, whether in Cincinnati, Grand Rapids, you look at Kansas City, very, very affordable compared to coastal towns or say in the Florida markets. And now we are seeing increase in home sales performing better in the Midwest, along with price appreciation doing better in the Midwest. But still, Midwest essentially selling at a 25% discount compared to the national median price.
And Katie, I want to return to something that you said here, saying, people view whether or not they're right, that, the rate cut from the Fed will make it more attractive for them to buy because they view it as being directly tied to the rate of their mortgage. Knowing that we're in this Fed cutting cycle and that is the perception of the broader market in terms of buyers, do you think with, 28% of Americans planning to purchase a property the next year, or at least hoping to, will some of that lack of understanding still encourage them to enter the market, even though we are currently seeing rates higher than we'd like?
Absolutely. And right now, with it still being 5% cheaper to buy a new home than an existing home, if they can even just get off the sidelines and go home shopping, the public builders are buying down the mortgage rates. And so they're getting them into that, 5 to 6% mortgage rate if you go into a new home community being offered by a publicly traded home builder. So there is that opportunity. And that's why we saw new home sales surge 20% last month.
And Lawrence, coming to you, we got earnings from KB Home yesterday. We saw, a pretty substantial uptick in the price of a first home for them. And we're seeing that across the board. Are you expecting that to soften at all? Because the high prices of homes for first-time buyers and move-up buyers is what we're told a big contributor to people not being able to achieve this goal of homeownership or increased homeownership.
The housing affordability is certainly a major challenge for first-time buyers. For trade-up buyers, because they have the housing equity, which they can use for substantial down payment, makes it easier. But the first-time buyers, they're facing challenges unless somehow the mortgage rate is able to go down towards 6 or maybe into the 5s range. 5.5, I would say that would be the absolute low point if we were to get there, given the large budget deficit situation. But nonetheless, I think the builders are beginning to build in outer suburbs where the land costs are cheaper, and beginning to build more smaller size home. So at least it's providing little more options for potential first-time buyers to get into the market. But it's really about the lower mortgage rate, qualifying more people to get the mortgages. With the mortgage rate, I think it's going to decline with the further anticipation and the Federal Reserve rate cut. In the past few weeks, a little sticky, but I do anticipate a little lower rates and better opportunity for first-time buyers.
All right. Well, some disagreement on whether the rate cuts are going to do positive things for our mortgage rates here, but we appreciate you both being with us to talk the state of the housing market and how the Fed rate cuts could potentially affect it. Katie Hubbard from Walton Global and Lawrence Yoon from the National Association of Realtors. Thank you both.